Welcome to another episode of the KO Insights podcast. What are your thoughts about eTIMS? Are we implementing eTIMS in the manner that should be implemented, or perhaps we should take a longer period of time to have proper implementation of eTIMS?
The compliant Kenyans are just about less than 4 million, which means 4 million Kenyans are carrying the weight of 50 million plus. And so every well-meaning citizen would be a champion for eTIMS, except that, the rollout has been quite chaotic and challenging. Chaotic because many things have failed, systems have failed. KRA has tried, honestly, we must give them the benefit of doubt. They've tried to listen to Kenyans, to try change what is not working. Those of us who file taxes, sometimes it's very frustrating, but we've seen KRA trying to make as much adjustments as they could.
Foremost, of course, is to say eTIMS is one thing that we definitely must get behind and support the Revenue Authority, and for very good reason. Because one, a very small bit of the population is supporting the economy formally in terms of compliance and actually paying tax.
This is the salaried.
The salaried. And the few compliant businesses. And few, I think, it describes that chunk of the population. And we have a growing population. I think we have projections now of 60 to 65 million by 2030, 2035 thereabout, when we take our next census. And that is extremely imbalanced. So getting people on board to pay tax must be done.
Greetings and a warm welcome to the KO Insights podcast. My name is Jedida Masharia, the finance officer here at the firm of Keldine and Odhiambo Associates. On today's episode, we'll be discussing all matters tax. We'll begin our conversation with a review of the budget for the fiscal year 2026-2027 and what this means from a tax perspective, but also for businesses at large. We will then delve deeper into eTIMS and general tax compliance from an accounting and legal perspective. Enjoy.
Hi, welcome to another episode of the KO Insights podcast. It's tax season. There is no way we can escape discussing tax, the finance bill, and the budget for the financial year 2026-2027. Stay tuned. And in this podcast, I'm Rosemary Wanjiko, a partner within the firm, and I'm joined by two amazing guests. Introduce yourself.
Thank you, Rosemary. My name is Jim Omollo. I lead accounting services at Keldine & Co. LLP, which is a licensed CPA firm here in Nairobi.
Great.
And Brian Odongo, not a stranger to this, a partner at the firm, Keldine and Odhiambo Associates, principally in dispute resolution, but also tax.
Great. Thank you for joining us and having this conversation with us. So before we get into the meat of things, what drew you to the tax practice?
The cost of non-compliance. When I began my career, I would see my employers receiving notifications from KRA, which notifications would essentially mean you close shop and go back home, So that aroused my curiosity in tax, and ever since, I don't think tax is the easiest of practices, but I think it's very practical and realistic.
Interesting. For you, Brian, what drew you to tax?
Well, good billing.
Okay.
One. But of course, I think a culture of compliance, because that, of course, looking at tax from the lens of a lawyer, we look at it from the perspective of compliance, and it forms part of the compliance ecosystem for anybody trading, particularly in this region and in the country for that matter. You cannot ignore it. So as you handle many things in the full life cycle compliance for any of your clients, particularly the corporate ones, tax becomes a topical question every time. And so having it among the things that we principally support with goes a long way.
Okay.
Yeah. For the business in the firm, but also for the business as a client.
Okay.
Yeah.
Interesting perspectives. So, Jim, given that you are the special guest in this episode, there's something we'd like to know far much more about you beyond tax. Yeah. Feel free, roll the dice. The color it lands on is the card you pick. Oh, okay. Purple. Mm-hmm.
So this is a general knowledge question. Traveling around Africa is more expensive than traveling around Europe. Fact or fiction? Fact.
It's sad. It
Yeah.
really is.
It's
Yeah.
really expensive. Not just because of our road networks, but the many visas you must get, the many stopovers or layovers you must have. If you're using Ethiopian Airlines and you're going to Morocco, for example, you have to go to Addis before you take another flight to Morocco.
Yeah. Yeah. Really sad. Brian, you want to roll the dice? Ooh.
Is that orange? I presume?
Yes, it's orange.
All right.
Vision board.
Vision board. All right. Let's see. If you could start over again, what would you do differently? As free as I want this to go? Or?
Yeah, feel free.
If you could start over again, what would you do differently? I'd study my master's a bit later.
Okay.
One, not too soon into practice. That is one for sure. I would do accounts alongside a law degree, because down the road, as you do many things, law, you find yourself being tagged along into accounting affairs, invariably. And I'd play some sport professionally.
Oh,
Yeah.
rugby.
I think I would enjoy. I think
Rugby?
Yeah.
Yeah.
Definitely.
Yeah. I'd be worried if you'd say you drop law. That would be
The law would still be up there.
good.
Yeah,
Good.
definitely, without a
Good.
doubt.
Yeah.
Without a
For you, if you're to do it all over again.
Wow, that's a tough question. I think I would believe in myself more.
Okay.
And I'm just saying that because I see how confidence takes people very far. People who probably don't have much knowledge, some who are very ignorant, but just because of confidence, they lead countries, they do big things, and there's nothing so extraordinary about them. So I think that for me would be something.
Good. Good. For me, if I was to do it all over again, I'd still stick to law. I don't think there's any other profession that gives me much joy as law has done over the years. So I'd stick to law. Perhaps some of the mistakes that I've got to done, I think I've come to an appreciation of those mistakes because then there's growth rather than regret. So I'd still stick to law and hopefully do those mistakes as I have done. Because that's the only way then we grow. Yeah. So thank you for that. At least now we get to know both of you a bit more. So 11th June 2026, we had the cabinet secretary share and actually speak towards the budget before Parliament. What are your thoughts about that?
I think comme ci, comme ça.
Okay.
There are trade-offs. There are those who won. But overall, there is a big question in the room about whether we will get all the money we need as a country. It's a 4.8 trillion budget. That sounds so huge. But part of that 4.8 is about 1.1 in debt payments, which means that the dream for zero-based budgeting, as was promised, is still not anywhere close to be achieved. But also the budget, as was read, is a reflection of how the government is evolving over time. In 2024, there were massive protests, and largely because of challenges with public participation. But we've seen the government trying to respond to what the public is saying. Case in point is that, what the CS was reading yesterday was so different from what was in the finance bill. And maybe we can allude that to the fact that he had gone to the ground and he had had so many complaints about some of the provisions in the finance bill. So, yeah, a lot can be said about the budget, but I guess it's a really tight fiscal space we are facing. Also knowing that this is an electioneering period, or an electioneering period is coming up before the next budget. And ordinarily, you would expect the government to spend much more than it does.
Yeah. Brian, your views?
That really captures it. Of course, top of the list in terms of concerns. Give or take, just about 74 to 75% of it is going to recurrent expenditure. Of course, the larger chunk of that being servicing debt, which of course is going to make it very expensive. So as you rightly say, figuring out where the rest is going to come from is going to be a challenge. Of course, they've also given an indication that only about 3.5 trillion can potentially, and I think potentially is used very deliberately there, come from the Revenue Authority. So the balance, of course, likely will affect us as we definitely roll into next year. Infrastructure project still remains big. Housing is in there. Agriculture, I think there's some priority focus areas that were picked out. But while at that, I think we still see a very deliberate focus on infrastructure and project development. Although not at the level that perhaps we thought it would get to. I think it was about 700 to 800 billion, thereabout. So a significant chunk of it. Looking at the budget policy statement earlier this year, sometime in February, and as against this, of course, there's the discussion of broadening the tax base, which has been a conversation now 5 years rolling. I think with the previous administration, that was a big concern because, as we typically say, those with the pay slip have really been bearing the brunt of running the economy, running the country. And the Revenue Authority perhaps has its work cut for it. It definitely does, for sure. Yeah, so of course, in there is the question of as to whether or not the Revenue Authority is going to be able to raise what is projected. As we said, of course, the discussion of broadening the tax base has been a long-standing discussion. And I think we saw attempts in 2024, 25, and now 26 with different models. And I think now there are such ingenious things banned, including getting us to file our returns on messaging apps like WhatsApp. That is just, I think, the Revenue Authority trying to demystify the concept of tax compliance, trying to see to it that those perhaps in the informal sector or those who may not necessarily be, captured as part of the contribution join in there. So the work is definitely cut out for them. I think there's some quick reactions on the budget statement.
Yeah. I think the thing that we all have to consider is the 1.1 trillion deficit and the proposal to finance it through domestic debt. In your view, are there any opportunities? Because I'd like us to focus on the positives rather than the negative of 1.1 trillion. It sounds like a big elephant. But are there positives to it being funded through domestic debt as opposed to foreign debt, besides, cushioning the shocks of interest rates? Yeah.
Certainly. It's a patriotic invitation to the general public that, this is our country, let's finance it. So that's one positive. The other thing is that, it's giving indications of a lot of confidence in the Kenyan market, because the government is saying we trust that we can raise a lot of money from our own people or investors locally. So that also gives a lot of, confidence even to foreign investors. The other thing is that it's also going to help, those of us who like investing in government bills to continue doing that with a lot of confidence, although with a lot of competition from the big boys. But yeah, I think it's if you're focusing on the positives alone, so that those are the positives I see.
So can we say that the university student who's now getting probably 3,000, 5,000 as pocket money can hive off a bit of it and buy treasury bills at interest rates above 9%? Because I think now it's down to 7%, if I'm not wrong. So if the government is going to finance domestically, that would now see competitive rates for the treasury bills and bonds, right?
That's a wait and see.
Okay.
In terms of the rates, I think that's a wait and see because CBK is also cautious of, what raising the interest rates will do to foreign exchange.
Okay.
But the government is also very deliberate in, making trading either in the stock market or, in government bills very accessible. Mobile phones. Remember the CS spoke about ZD yesterday, saying how easy it's become for Kenyans to, invest in local markets, which I think is a positive thing. I think, we started this conversation with what we could do differently.
Yeah.
I think I could have invested more when I was younger. And I think those who are young now should probably take advantage of these opportunities. Yeah.
Okay. Brian?
If there's going to be a lot of internal financing that government is going to be focusing on, perhaps that may depress the commercial market, because then commercial banks will want to focus on trading with government and dealing with government. I think we saw that sometime when we were just leaving off of 2022 thereabout, when there was a lot of focus on trading with government, and so that of course depressed the open commercial market out there for common citizenry. Of course, government has been very cautious in terms of two things which we've seen in the recent past. One is foreign exchange reserves, dollar at least. I think the G2G model, at least for fuel, did help quite a bit because that was a big bleeder for the dollar. And I think we've seen its effect in the sense that in a way, the dollar has stabilized because at least we hold off for 6 months before we repay, and it gives government an upside to pull whatever we may need to pull. So we may see that continue, at least to try and stabilize things. So as you rightly say, of course, the ministry and the CBK remain cautious in that regard. The difficulty in there, of course, also remains, I think, a week ago, 2 weeks, last week actually, if not this week, there was the indication of the interest rates that was at 8.5%, if I'm not mistaken. So that also will definitely have a bearing. But on the positive, absolutely, I think it will definitely invite a lot of people to look at this market. And I think Kenya now, for a sustained period, has given a clear indication that its obligation will always be met. Of course, the converse of that is the rest of us will feel it, because for the portfolio investors, the obligation must be met as and when it's due. The rates may drop definitely, because of course there'll be this element of oversupply because government will be demanding significantly more. But the commercial banks are out to benefit. That definitely is a big win for commercial banks. But perhaps, as you rightly, it's a wait and see on the ripple effect. But perhaps we could anticipate a bit of a depressed season till the next cycle.
Yeah, particularly in terms of access to credit for MSMEs and also just first-time homeowners. The interest rate might not be very attractive. Yeah.
And the risk for
And the
commercial
risk as
banks,
well.
it's better off trade with government.
Yeah, for sure. So when we think about the revenue generation plan that has been shared by government through the finance bill and the budgets, can we see the two of them working together, or we foresee a different outcome in terms of amendments to the finance bill, in terms of perhaps business laws, amendment acts, and many other laws just coming to supplement the revenue generation plan by government?
Yeah, I foresee some pushback. Some of the proposals in the finance bill. And it's interesting that, even the government itself is not speaking with one voice.
Yeah.
the president saying that, we are going to cushion low-income earners such that those earning below 30,000 shillings will not be able to pay any tax. Of course, they still pay. We know housing levy and all these things. But we would still imagine that can still come back through an amendment in Parliament. And of course, one of the biggest issues in this finance bill was agency notices by KRA, for example. And, the CS was saying that you need to get stay orders. So he made an amendment before an amendment. And they say that, those who have agency notices will need to get stay orders. You guys are best placed to advise on how stay orders are obtained. Yeah. But, that's still not something easy to do, I would imagine, and may still get some pushback in the discussions that are going to happen in Parliament in the next few weeks. But in terms of financing, I think the government is working on a very tight rope. And I think what the government needs to do, which probably they won't do, is to deal with budgeted corruption, because that's a major leakage point. And even the reason why we are where we are with our debt situation is because of budgeted corruption. Some of the infrastructure projects we have done have costed way higher than they should have. So that's the only way to, get us out of this mess. That's the only way to actualize zero-based budgeting, if we ever get there. And that's the only way to have less worries about whether we'll be able to raise enough funds internally to finance our budget as a country.
I mean, those are some very good takes and a very good question, actually. Of course, the budget statement is very aspirational. Eventually, it boils back down to law. The finance bill, of course, being on the top of the list. Then, of course, it's very cyclical. We then expect a few changes down the road with significant amendments. Down the road, of course, we soon expect excess duty. Soon thereafter, a series of changes to affect different dockets. And that is really where, as they say, the rubber meets the road in terms of whether or not these will be implementable. So, I mean, should we really focus so much on the balance? A direct nexus between the budget statement and the proposed amendments. The proposed amendments, of course, will take center stage at the end of the day. Of course, there are some good gives and takes in there, but nonetheless, some of those are yet to. I mean, we did take a view from a bill perspective. We'll definitely wait for that to materialize for us then to take us a proper position. But that being said, I do not anticipate a lot of changes, significant at least. Because again, you have to remember that government is doing this in a season of a very sensitive political season. Elections are soon here. But before that, we're in June, and June is very sensitive from 2024, 2025, and now June closer to elections. So a lot of those sensitivities, of course, have to be factored in. While at that, of course, is the expectation that we will see a lot of amendments to legislation to then, well, for lack of a better word, sneak in enabling provisions into law for the revenue authorities to actually see to that they collect what they can collect. Of course, last year, the year just ended. The year that we're ending now, they've given fairly some good projections as to their current position, what they'll be able to realize. Still not where they'd hoped to be, which of course speaks back to even the 3.5 trillion projected in the budget statement perhaps still remains ambitious.
Yeah. So even as we think about the financing of the budget, we more and more we are seeing that government has taken a stance of not increasing tax per se, but rather broadening the tax band. And we are seeing this through eTIMS. There's no other way it's eTIMS. What are your thoughts about eTIMS? Are we implementing eTIMS in the manner that should be implemented, or perhaps we should take a longer period of time to have proper implementation of eTIMS?
Good question. I think eTIMS is very revolutionary. And I am not sure, but perhaps this is something that KRA has been studying for a while, monitoring the trends and patterns amongst taxpayers. But you remember it began with VAT to strengthen VAT compliance. But then they realized, wait a minute, there's just so much we can collect from VAT. What about the real tax, income tax from all Kenyans, and of course, was it the other day when I had someone say that, the compliant Kenyans are just about less than 4 million, which means 4 million Kenyans are carrying the weight of 50 million plus. And so every well-meaning citizen would be a champion for eTIMS, except that, the rollout have been quite chaotic and challenging. Chaotic because many things have failed, systems have failed. KRA has tried, honestly, we must give them the benefit of doubt. They've tried to listen to Kenyans, to try change what is not working. Those of us who file taxes, sometimes it's very frustrating, but we've seen KRA trying to make as much adjustments as they could. But still, there are many challenges, especially because the target audience, at this point in time, I don't think our economy is in such a place where the mama mboga can be onboarded fully onto eTIMS.
Yes.
And not just because of what they earn, but also just because of the high cost of living and all these other plagues that we have as a country. So I would say eTIMS is a good and a bold step that the government took, but I think they could have thought about the rollout, including certain proposals that people made that for a season we should just have those who earn 5 million shillings and above to be the ones who are eligible for eTIMS, just like VAT. But of course, government, knowing where it is, the debt trap, they just say, no, we cannot wait for the future. We must do this now.
Yeah. In fact, the rollout of eTIMS, is it an amendment without an amendment by including those who earn below 5 million get in there as well?
Well, you would say
to
that.
use your word.
You would say that, but I mean, it's now in law.
Yeah.
It's in law. We can debate and say so many things about that. But I think by and large, we have seen businesses that are in environments where they can comply find the eTIMS part so easy in terms of filing returns, because then you have a record of what KRA has and it matches your record, you're good to go. But there are those businesses that they work in the informal sectors of the economy. So for example, restaurants, you have this very reliable supplier of your vegetables. Their vegetables are much better than the person who would give you eatings. So what do? There are so many risks that come to business as a result of that.
Yeah. Actually, to pick up from that example of the vegetable vendor in the business, and yet there's need to be tax compliant. What happens to that restaurant? Is it that then they enforce reverse invoicing, or then they tell the mama mboga, no eatings, no pay? What's the solution there? Because everyone gets hurt one way or another.
I think there are two sides of the same coin.
Yeah.
Reverse invoicing still needs consent, which is just as good as onboarding onto eTIMS. So, and that's something that some people don't understand. What do you mean? Why is KRA looking for my small pennies? I have so much burden around my social influence, and I'm not sure why I should give the government more.
Yeah.
And most Kenyans also argue that we're already paying tax, we're already paying VAT, we're already paying excess duty through the things we purchase. but sadly, that's where we find ourselves. I mean, there's also been an argument that has been pointed by, the tax authorities that, look, we are the ones who are really behind in terms of enforcing tax compliance, even within our region, And of course, the classical case they usually give is Rwanda's case, where eTIMS has been a model similar to eTIMS has been enforced for quite a while and it's achieving good results. I guess the only conversation they're shy of having is how did they roll it out?
Yeah.
Yeah.
Yeah. Okay.
Yeah. This is an interesting one because I think it presents two positions that may not necessarily agree. I think foremost, of course, is to say eTIMS is one thing that we definitely must get behind and support the Revenue Authority, and for very good reason. Because one, a very small bit of the population is supporting the economy formally in terms of compliance and actually paying tax.
This is the salaried.
The salaried, and the few compliant businesses.
Yeah.
And few, I think, it describes that chunk of the population. And we have a growing population. I think we have projections now of 60 to 65 million by 2035 thereabout, when we take our next census. And that is extremely imbalanced. So getting people on board to pay tax must be done. The difficulty and why Kenyans, of course, keep complaining is the feeling that they're not getting commensurate service that reflects what they're paying for in taxes. Of course, that is not the role of the Kenya Revenue Authority. The role of the authority is to collect an account, not actually account, to collect. Somebody else does the accounting bit of it. And so perhaps the Revenue Authority also has to very subtly in the back end push back and tell people that their biggest impeding factor is acceptance. And acceptance is not a function of the Revenue Authority. It's the executive. And of course, to some extent, county governments, because the people who discharge services on the basis of what the Revenue Authority then says we've collected. And so if Kenyans felt that there was commensurate service for tax paid, of course, people will definitely want to pay for taxes. I think pay taxes rather. I think we've seen a lot of Nordic countries where tax gets beyond the 50% mark, 55%, oftentimes up to 60%.
Yeah.
But then a lot of services
are rendered. Yeah. To the required standard.
So medical,
actually.
Education, transportation.
Yeah.
You don't have to worry about it. So you don't mind
paying that tax.
Paying that tax. But the converse is, I do not think there would be difficulty in adoption if there was commensurate service. So I think the solution there is the Revenue Authority. Every time those discussions are had with the executive as to where collection currently sits, they also give them the indication that you do us a great favor by returning the favor to the citizenry. Of course, now focusing now from a strict review of the eTIMS structure, again, coming from the point of we have to do it, is because it allows us to walk the path of expanding the tax base. Perhaps for us as a country now, which I think is something that I would support, is this is something that perhaps we have to do as, a hard fix. We cannot allow it. I mean, and I think we are way past is flowing it into the ecosystem seamlessly, because we really are at a difficult point. If you're discussing earlier, trying to finance up to 1.1 trillion, which definitely we can raise, looking at the numbers currently, then definitely has to be done. The problems in there, I don't know whether they can be called teaching problems, because the problems that should be resolved, particularly for a compliance framework like eTIMS, you just want it to work. Of course, a lot has been done, which we definitely commend, but it would also be helpful if it was seamless for those who want to keep remaining compliant, because there is an advantage to it. Top of the list, of course, gives you a good night's sleep. You know that the Revenue Authority will not give you peace of mind. It gives you peace of mind. It also gives you, the confidence to ask for better service. But of course, top of the list, it builds for a better environment for all of us, because it is from that money that government does infrastructure. And remember, the biggest economic stimulus activity in our part of the world remains government. And if government is funded, if government is running efficiently, all of us in business then benefit. Yeah. So long and short of it, I think it's something that the Revenue Authority has to steer to keep that path diligently, not drop it and feel that perhaps there's a bit of aggression or difficulty in adoption. It has to work, as they say, like Nairobi.
Yeah.
There's just one more thing that the eTIMS conversation has brought about, which I don't know how challenging it is legally. The question about whether we are still a self-assessment tax system or or now we are being assessed, and it's a question that KRA is also struggling to answer, because if you're going to file returns based on what the Revenue Authority has, then it's no longer self-assessment.
Yeah. It actually isn't. In fact, that takes me to this provision of law that says once you receive an assessment, the burden of proof is on you to show whether or not that assessment is flawed, or essentially you'd be proposing a payment plan. So maybe eTIMS is actually a solution to that.
But it's shifting the burden of proof the other side.
Yeah,
so,
yeah.
I don't know how KRA is going to handle that, because I'm sure this is something they are going to meet in the courts of law going forward.
Yeah. Particularly now as well, where recently KRA said, feel free to file your returns whether or not you have an eTIMS receipt or an invoice. So is that an audit trap? Or, let's meet the deadline, June 30th deadline. Are they helping us to meet the deadline, or it's just an audit waiting to happen?
I think perhaps let me comment on that by not answering it, but by sort of a scat around it. But I think it will help demystify.
Yeah.
And these are some of the things that we mean when we say there's a lot of friction in the relationship between the taxpayer and the tax master. And it comes from the fact that there's a deficit in the sense that people feel I'm not getting what I'm contributing to. All right. In a perfect environment, of course, you'd be sure that I can file my returns now. And when I catch up in terms of accounting, eTIMS included, it will tally in a perfect environment. All right. Of course, that then is the base from which you're coming from. So then you'd say the better situation then, of course, would be, particularly for some of us in the professional services sector, it's a lot easier to comply, because everybody with whom you deal and trade generally will be in the compliant and in the eTIMS structure. Of course, there are those bits and bobs here and there. They'll not get into the millions that you still have to spend on people who not necessarily, like your milkman or newspapers, for instance. It's a perfect example. We all consume Business Daily, the East African, Daily Nation, you name it. But we're not getting it from a formalized structure, so to say. But it's still an expenditure on our part. Of course, there's a way for accounting for it. There's some allowances in there. But nonetheless, that speaks to a very small chunk of the economy, professional services, for manufacturers, for the informal services sector, which is in fact the bigger chunk of the economy, as you rightly said. Somebody in the hotels sector is a perfect example. They'll be getting sacks of potatoes, which potentially is, other than perhaps chicken, and I'm speaking for millennials who ate chicken and chips. Yeah. Other than the chicken supply, all your other suppliers do not give you anything in a formalized structure. It's a cash-based system. So again, I go back to the question, to the indication of saying that I think the eTIMS drive is something that we must get behind, because it will be an uncomfortable discussion to the point where all of us then get compliant. It's not going to be an easy road to stick, but I think we must, because then eventually you tell your supplier that where I've gotten now, you're going to have to give me an eTIMS receipt for those potatoes. Yeah.
Wow.
It's probably just simplifying the work of KRA officers to be able to flag easily those who are not compliant. And of course, we've learned lately that they have employed AI tools, to help them analyze data and see trends and, pick out things that are not adding up. So I guess they allowed people to file non-compliant invoices just because of certain realities on the ground, which I don't think may change in 2026. yet, may probably change in the next 3 or 4 years. But people are saying Uber, they don't give us eTIMS invoices, matatus, and these are things that business people use every day. I remember and these are just some realities that could hit people without you imagining that it was going to that extent. Because if you are using home fiber internet in your office, and Safaricom tells you we don't issue eTIMS invoices for home fiber, that becomes a very difficult conversation. Assuming you're spending 10,000 shillings a month on internet, that means you're going to forfeit 120. So I guess the authority realized that reality on the ground is such that we may actually not see many people filing returns if we stick our guns that you must do it through the eTIMS path and using eTIMS data. And so they realized that we may even fall short on our collection targets if we go this route.
So we've discussed the exposure because of the budget statement that was read yesterday in terms of potential reduced credit to businesses. We have also discussed the challenges with eTIMS, and particularly those who deal with the informal sector. What are some of the things, or rather, what are some of the mitigation factors that businesses could employ to tackle that risk exposure with KRA and to avoid assessment, particularly in light of these changes and the trends that we are seeing right now?
I think one of them is moving compliance upstream. It's no longer the finance office.
It now must be at the board level.
Be at procurement.
Okay.
The people are actually dealing with the vendors must be aware of what the implications are. Your messenger must be aware of what it means to have a compliant eTIMS invoice. That it should not just be an eTIMS invoice, but it must bear your PIN on it. So you must just push compliance to the very people, your executors. Otherwise, the finance office will have a very difficult time reconciling, their compliance status, so to speak.
Let me push back on that before you proceed. So in other words, as I'm getting to an Uber cab, I need to ask the driver, what's your KRA PIN? Is he really likely to share that information with me, especially because we're strangers?
That's not going to be easy.
Or we need to write to Uber, the company itself, and tell Uber, give me an eTIMS.
I've heard of people who've managed to get through to Uber, but they say it really took a long time.
Okay.
But what other people are doing is onboarding Uber corporate. So then you're able to get eTIMS invoices from Uber itself, because the drivers are also crying. I mean, I'm not going to buy parts where I'm going to get an eTIMS invoice. And yet this is business expense, I need to buy bushes, I need to buy whatever. Or sometimes wipers from those who sell them, on the streets. So there's still going to be some challenges there, but with time, I think it's something that we're going to get used to. I think Kenyans are generally resilient and we adopt systems very fast, but it's going to be a bit challenging.
Mitigation?
I think that really is the magic with eTIMS. I know as I'm speaking, everyone keeps thinking that perhaps I'm holding brief for the revenue.
You are, aren't you?
So it's a concept of a node, and from that node, you then spread out. And what is the node for the revenue authority? Those who are already compliant, because they will want to remain compliant. Perfect example would be those of us in professional services sector. We tend to be compliant, all right? And you want to keep that cycle of always being compliant. And so the revenue authority then said, I will use you to find those who are non-compliant and to invite the rest into the fold. And I think it will work. And this gives us a perfect example of our discussion on Uber services, for instance, where people are then saying that I will then stop using Uber, for instance, the self-request rides. I will then go to Uber directly for corporate services. And that is the shift. And that shift invariably does two things. It ensures that Uber then also down the road procures from those who are themselves compliant. All right. Top of the list, one is, as you're saying, people are having the discussion with the Revenue Authority and looking at it from a node and then spread out approach. But let's go back to mitigation before sort of giving justification for why, again, eTIMS makes a lot of sense. One, of course, is over and above channeling that obligation upwards to people who execute and consume to ensure that you don't give a burden to your finance teams, is also partnering with professional service providers who can walk the path with you. Because before you comply, you have to be aware. And awareness is not, for those of us in practice, we take it for granted. We know. And so we have the folly of assuming that everyone does. So I think partnering with a service provider who can walk that path with you is very critical. Be it an accounting or an audit services firm or a law firm that can walk that journey with you and give an indication of where you stand and what you can do. That is very helpful because there is no one solution fix all. You need to experience different businesses, walk different journeys and experience things differently. And so a tailored approach definitely helps. But I think, as we've rightly said, the best element is ensuring that you trade with those who facilitate you to be compliant, because we'll soon walk away from the non-compliant invoice structure. And we are going to have a strict regime where you definitely have to be compliant. But then looking at it broadly, now this is very academic, not practical, is that is the magic of eTIMS, in the sense that the discomfort eventually gets us to the place where then everyone then becomes compliant. Because if Uber shakes, if a corporate entity transitions to Uber corporate, the drivers will be asking themselves what has changed. And they'll quickly realize that what changed is the fact that the corporate entity wanted an eTIMS compliant invoice. And so they'll go and get it because the business then makes sense. And even then down the road, they'll begin asking themselves, do I want to go to Omosh in industrial area, or do I want to cross over and actually go to Sifao, who are directly opposite Omosh, my artisanal mechanic? For what reason? Because Sifao will actually then give me an invoice. Of course, it is not going to be an overnight solution because Omosh will take a while before he actually bothers to register and be eTIMS compliant. But that is the part that we eventually walk to increase that percentage to 30, 40, 50%. I think if we get to 60%, which is not a 2-year thing, it's not a 10-year thing, it's not a 15-year thing, we'll be in a place where then the population can actually support the budget.
And what you say actually makes me think that eTIMS also affords corporates opportunities to think of tools or services or products that work for the common man. So that's also an opportunity which really can generate them a lot of revenue in the long term. So, for example, if Sifao would say we are opening this plant for Uber drivers, that's going to be something very profound. But then I also liked what you said about the need to partner with professionals to support your tax compliance journey, because I think sometimes eTIMS is one vehicle, but tax compliance is all the tax laws. So you may be eTIMS compliant, but you still have some tax exposure, and which makes me think that I think one of those mitigating measures every person should think about is doing tax health checks on a random basis, whether in-house or through external service providers, because you really need to know your tax status. You may make a decision which to you just looks normal, but the next day KRA knocks your doors and you realize you owe them a lot of money. For example, there have been even cases that looked so innocent. Like I remember there was a case about this doctor who worked for WHO. And KRA knocked his door because he was making serious purchases, and which they had reason to believe that was not only funded by WHO salary. So you see, it's come to the point where, and I think doctors and professionals have become a soft target for KRA as an institution, because again, they don't anticipate that professionals will have a lot of expenses to review. So your expenses are so ordinary, maybe rent, internet, and so on and so forth. So yeah, I think it's very important to invest in tax health checks so that at any point in time you know your tax status.
Yeah. That's really profound, actually. In other words, if you're running a side hustle, run it with tax in mind. Oh, wow. Okay, that's great.
There are people who have actually been assessed just because they bought a car.
Yeah.
So, you buy a GLE.
Yeah.
That passes through KRA. They're like, based on your returns,
This doesn't make sense.
You can't afford it.
Yeah. You must be earning elsewhere as well.
Yeah. And I think just before we let go of that, I think the Revenue Authority has also pivoted a lot. We've seen also the discussions now on things banned, including parental income.
Yeah.
How that is treated now as income is fairly interesting. And I think gradually we then get to a place where we'll actually have to ask our landlords that I need an invoice, so that we help the Revenue Authority bring that cohort into the fold. And I think that is one of the lowest lying fruits for the Revenue Authority, if you think about it, because we all live somewhere, and owners are significantly few as compared to the larger population who live in different places. So I think bit by bit, this concept of broadening the tax base will actually eventually work, but there'll be a lot of discomfort while at it, and that's why it's important to tag along with a professional service provider to help you along the journey. If you're a landlord, what does that look like? What does it mean for you? How do you account for that tax? In what category do you pay for it? At what rate?
Yeah.
Some of that knowledge goes a long way.
Yeah. Will we also be seeing an uptick of indemnity clauses in your supplier agreement, where, we say payment shall only be made upon issuance of eTIMS compliant invoice?
Yeah, well, I mean, absolutely, yes. I think this now straddles an accounting legal question perfectly, definitely, because there is a direct implication. Because let's take the perfect example, VAT. Value added tax, the person paying is not the person sitting before the authority. It's another individual elsewhere. But the person with the bane of actually accounting for it is the person who channels it through. So it absolutely would be a fair clause to include by telling someone that I will only pay you if you pay your dues, and your dues in this case become 16% of the services that I'm rendering to you as your bill, not my bill, the professional service provider. So that then, if you want to claim it downstream, you can. And that's how it ideally works, until eventually it lands onto the door of the person who bears for it. Perfect example would be excess duty. We never question. And that is because it's gained notoriety, it's been embedded in the most perfect way. And so professional services, goods and services that fall within the category of VAT will eventually get to the place where excess duty has gotten. Now, all that we ever discuss in terms of excess duty is the rate, all right? Not quite who, all right? It's the rate. We'll get there with VAT and eventually income and income tax. Yeah, I think so.
Thank you. Any last word?
One underrated bedrock of tax compliance is accounting. And recently we've seen, for a long time, the Revenue Authority operated as though what matters is cash accounting. What comes in, what goes out. But, with this tax season, we've seen them accommodate accruals, adjustments that are accounting adjustments. And that really brings Kenya to a point where we are not just thinking about home country compliance, but also globally, how do we make it easy for other people to do business within our country? Because you can imagine for someone who is doing consolidation of accounts across borders, insisting on cash accounting would be very would really throw them off in terms of tying their books together. So I think it goes without saying that records, and not just any records. I think accounting records should be the bedrock of tax compliance. It's not just as simple as your income and expenses, but I foresee a situation where in the future, the Revenue Authority will start looking at balance sheets, to see whether the story is consistent. Sometimes we hide so many things in the balance sheet. Yeah, so proper accounting, and you see the requirement to have your records in place for the last 5 years makes you believe that without a general ledger for those 5 years, then you're really exposed. Because when KRA comes knocking at your door, they'll ask you for a general ledger. If you've never heard of a general ledger, you'll not be able to produce it within the 30 days or whatever time they give you. So yeah, I think my last comments will be that the bedrock of tax compliance is proper accounting.
Just word?
Yeah, I'll make a good case for lawyers. A good case has been made for the accounting bit of life. Of course, going back to the typical case of working hand in hand with the professional service provider, both in accounting but also in legal. The health checks that we spoke about go a very long way in terms of just knowing where do you sit in terms of the compliance cycles. Because I think oftentimes tax compliance has been hived off as you're doing your typical health checks on many other compliance parameters, and you say, for instance, you're in a regulated space. People tend to focus so much on that, and tax is looked at with the lens of this thing that I must do, forgetting that you can actually bring it across on this other side by making it a very cyclical thing. That when it comes time for your returns, because that is the point of interface with the Revenue Authority, it becomes very easy. It is not a sweat process. So having a constant journey of working with a professional service provider is helpful. That, of course, has to be spoken to as a parting shot again with giving comfort to foreign investors who are looking at the market and perhaps seeing that it's becoming so stringent that you are dropping down the indices in terms of the ease of doing business assessment. Of course, this is also time for government to preach and put the information out there that there are many other avenues. Special economic zones are now out there. I think those give you some benefits. There are special funds and investment structure that if you do, you get a lot of tax benefit. The Capital Markets Authority hosts a series of those. Different regulators in different spaces do host a series of those. So understanding where else and how else you can channel and work in the economy, I think that is there. But that being said, of course, government also has to think about this in context of understanding that it could get to a point where it definitely strangled investment, and people feel that there's so much to do in terms of compliance in tax alone before I get to the many other things. Of course, you've had the cry that perhaps we are overregulated, and that there is need to condense some of these things into one spot. I think some of the most basic that we did, which was very helpful, we saw with, say, for instance, unified business permits that local government authorities did, and it helped a great deal. So perhaps with the many regulators also, particularly for the cyclical charges and compliance payments, if those could be put to a one-stop shop where you pay for it and it takes a series of things, so that we don't look at such a broad table of different regulators who are talking to you. And then at the same time, you have this headache tax.
Yeah, thank you. I think this was a very helpful discussion in terms of just understanding the budget a bit more, trying to picture what is likely to take place coming, the days coming, and also just helping businesses to change their perspective as to what tax means. It's really just a matter of walking that journey in terms of doing health checks and confirming your compliance status. Yeah, so thank you. Hope to have you guys again for another tax discussion in the horizon. Karibu. Thank you.
Asante.
Thank you for joining us in this episode where we discussed the budget statement shared by the Cabinet Secretary on the 11th of June, where we also discussed the Finance Bill 2026 and also any tax risk mitigation measures that businesses can take. For more and also to just have a chance to go through this episode once more, feel free to follow us on our social media platforms. Thank you. See you on the next one. Bye.